So why are more people looking at commercial property?
Yeah, I think obviously the first one, especially with self-managed super funds, legislation has changed the whole ball game. So that's probably going to be the biggest one. But there are other things, and I mentioned one of them was about being able to get a tenant in there with a longer term lease. So you take out that element of risk. Typically the yields are a little bit higher as well when it comes to commercial property. So I don't know what the current ones are because I'm not a property expert, but I think in the past it's always been around that 7-8% yield compared to Hi everyone, and welcome back to another episode of the Brokers Lounge, where we talk about anything and everything, but mainly to do with finance. So if we talked about anything and everything, we probably don't have enough time here off. But before we start, Eddie, my wonderful co-host,
My lovely co-host, Carlo.
how are you, mate?
I'm good, mate. How you doing?
Yeah, good. Yeah,
Good.
Yeah. It feels a bit weird that we're doing this on a different day than what we normally do. So
Yeah. Change is good sometimes.
yes, as you can see, no more casual clothes and jeans and everything, jeans and runners. So we dressed normally today. So
Yeah.
that's good. That's good. Look, today we're going to be talking about a topic that's probably a little bit more prevalent nowadays than what it used to be. And we're going to be talking about purchasing of commercial property within your self-managed super fund. For those of you who've been tuning into our podcast in the past, you would have heard us talk about the recent changes to legislation, whereby investors can't purchase residential property within their self-managed super fund anymore. So that's obviously made clients change tack a little bit and look at potentially purchasing a commercial property instead. Having said that, there's still people who have gone down that path without even looking at purchasing residential property anyway. So maybe we can just start through by talking about what is commercial lending within self-managed super fund. I know we've talked about it a little bit in residential, so there's probably not a lot of difference as such. Do you want to run through that, mate?
Yeah. So basically from a lending point of view, it's exactly the same as residential lending. So you still get your limited recourse borrowing against a property purchase. You borrow the amount needed, which will fund the purchase, and then you contribute the difference, which is the deposit, the stamps, and any costs associated with the purchase. Now, the little difference from a commercial side of view to residential is the deposit required. So 20% can get the job done, but 90% of lenders would want to see 30% contribution. Rates are slightly higher on the commercial side than the residential side. And obviously purchase points are widely different depending on the asset you're trying to purchase and location and the income it's generating. So these are the main differences, but it's very similar from a process point of view. And it's a very good strategy for a lot of people, especially for self-employed people who run their business out of a commercial premises, and that can allow them to purchase that property and pay themselves the rent, pay the self-managed super fund the rent rather than pay the landlord a rent, which could be hitting two birds in one stone, as the saying goes. So basically you own the property, you've got that asset in your self-managed super fund, which can be a vehicle which will help you in your retirement. You're paying down the debt and you're building that equity as you go over the years. You're not paying rent to some third party anymore. You're paying your self-managed super fund the rent, and along with the tax savings that you can have from your contribution to your self-managed super fund, plus the tax savings that you can have later on in the future, those combined can work out to be a very good strategy.
And
assuming you choose the right asset.
Yeah, exactly right. And it works well as, when you think about that, when you're purchasing a commercial property, it is quite different from a residential in terms of the type of tenant you're typically going to attract. It's going to be a business owner. So to take that, and that can be hard to find the right type of tenant as well. It might take you a little bit longer, but when you take that out of the equation, because it's self-managed, you can potentially use the premises that you're operating out and purchase it through self-managed. It makes a hell of a difference. Takes out that extra worry, I shouldn't say worry, but another thing.
Less risk, right?
Correct, yeah.
So, and that's where you go through like the checklist of risk to assess if that's the right thing for you to do.
Yeah.
And it comes down to how strongly you believe in your business, how long you think you're going to be operating that business for, how long you reckon that property you're purchasing, you're going to be running your business from is going to stay suitable. Like, let's say you overgrow it, then what's your plan?
Yeah.
There's no plan of overgrowing the property, then there's no issues there.
Yeah.
So you do the assessment just to make sure that you're doing the right asset.
Grow the property. At least you still retain the asset back in your self-managed.
But then you're going to have to find another tenant, which can be.
Yeah. And then bear in mind too that if you are a business owner and you decide to purchase the property that you're operating out of, the rent has to be a commercially or market. What's the word I'm looking for?
It's got to be arm's length.
Yeah, correct.
Arm's length.
I'm trying to think of the word. It's basically going to be on commercial terms. So you can't be saying, "Oh, yeah, we're going to rent it out and we're only going to pay like 50% of what we normally would pay another landlord." It's still going to be
within market range.
Yeah, and it makes sense to do it.
Absolutely, absolutely. And that works fantastic for. I think the best people suitable for this are the medical sector. Like if you're a doctor, you've got your own clinic, you want to run your business out of that clinic, you go ahead and do that, because usually if you've got a decent super balance and you're going to be doing this for a long time. Yeah. So, and then you've got people that need the warehouse where they run the business from.
Yeah, I've seen that a few times.
Yeah, you've got your really anyone like accountants or advisors or brokers. You're running your, business out of an office. So it works for a lot of people.
Yeah, and like I said, I've seen it quite a few times where people have decided to purchase like their warehouse through their self-managed super fund, and it's like they get to a point where it's like, that's it, we're done with our business now, we're selling. It's like, it's a win-win because they sell their business, they get a big influx of funds that way, and they still get to retain the assets that they've been operating out for some period of time as
100%.
well. So, like you said, it's a win-win, well and truly. But it's probably worthwhile highlighting right from the outset that it is not for everyone as well.
Absolutely,
because it does carry a different set of risks compared to residential property. So
100%. So it is a strategy that's been around for many years, and now we're seeing it picking back up, especially after residential has dropped on the self-managed super fund side of things.
I guess the other good thing with commercial property is the longer lease terms. So typically when residential property, you might get a tenant in there, but it's probably going to be on a 12-month rolling contract at best. Could be even 6 monthly, but at least with a commercial, someone's not going to typically sign a lease for 12 months. It's going to be probably a 3x3x3 or 5x5x5, something like that. So at least you're taking that element of risk out right from the very beginning.
Absolutely.
And for a longer period of time as well. So,
but very important point to be made there is if you're buying a commercial property that hasn't got a very long lease term, like let's say there's a year left on the lease term, right? And that rent is below market average. Because commercial property is assessed as on a value basis based on the revenue. You might be able to get yourself a bargain there, and then you're going to have to take a risk where, after this year's done, you can renegotiate the rent and push it back up, which will see you make a profit or a growth on the value of the property straight away. So it could be an advantage if the lease term is not long enough, because it will allow you to get in there, renegotiate the rental term, and then rent it back.
Good point.
So why are more people looking at commercial property, you reckon?
I think obviously the first one, especially with self-managed super funds, government legislation has changed the whole ball game. So that's probably going to be the biggest one. But there are other things, and I mentioned one of them was about being able to get a tenant in there with a longer term lease. So you take out that element of risk. Typically the yields are a little bit higher as well when it comes to commercial property. So I don't know what the current ones are because I'm not a property expert, but I think in the past it's always been around that 7-8% yield compared to residential. At the moment, it's probably sitting in that 3 to 4% range. Now, there's always flip side of everything that we talk about here, and one of them would be on the flip side is that you go to sell a commercial property, probably going to take you a little bit longer to sell compared to a residential property. So the other thing is, well, is why people are getting into commercials, the diversification as well, because typically a business owner, for argument's sake, even just normal investor really, they'll have their family home. So that's in residential property. They may have another investment property. They'll have super that'll be invested in a whole range of things, including shares, managed funds. Having commercial property in there just throws a different asset class in that mix as well, which I think is obviously very important. And I know our colleagues out the door here will be talking about diversification with the clients all the time and how important it actually is. Because over the time, you'll always see that there'll be times where commercial property will be up, residential property will be down, managed funds will be down, shares up, whatever it might be. So, to have a diversification does take away an element of risk for an investor.
It strengthens your portfolio, obviously, and just makes you invested on many fronts, which in the long term can be very beneficial.
Yeah, and that's probably the key thing. Talking about long.
It's all long term.
It is definitely a long play.
Absolutely.
It's not something you just go in and go, hey, I'm going to purchase a commercial property tomorrow, and I might just hold on to it for a couple of years, but it's not really the case.
Especially with commercial, right? Like historically, it's always been the flip side of commercial is slower growth but higher yield.
Yep.
Investment residential properties, lower yield, higher growth. But there's a lot of talks about commercial property picking up now because there's going to be a bit more focus, a bit more demand on commercial property.
Yep.
So if you get in early, you could be potentially, that's not advice, just, but
little disclaimer.
Yeah. But if you get in early on a commercial property, I don't know, you might be in for a winner here.
Well, people are going to park their funds somewhere.
So,
it's, and this government's been pushing superannuation for many, many years now, as far back as I can remember working.
Yep.
And self-managed super funds have become a lot more favourable, a lot more popular out there because people want control.
Yep.
There's nothing worse than pouring all this money into superannuation and they're not having any control over it, and all of a sudden, whoever you're with is putting in bad investments or whatever it might be, or non-performing assets. So,
yeah, absolutely.
So I think, you're right. There could be some good opportunities out there, but it's always carries an element of risk. So
like everything.
Mindful. Yeah, exactly right. I think that'd be the main ones. If we talk about high rental yields, longer lease agreements, greater diversification, and I guess just different market opportunities as well. It does open up a lot more opportunities for people out there. So I think it's probably just worthwhile just to quickly touch on probably the main types of people this suits. I know we just briefly spoke about it, but
so look,
it's three main ones really in there.
It's for pretty much everyone who ticks the boxes, right? So obviously if you're self-employed, then you're like one step more invested in this because you've got that expense going on, so you might as well take advantage of it. And the second box you need to tick is make sure your SMSF balance allows you to do that, right? Because like we said, the entry point can be a bit higher, the purchase price can be a bit higher, contributions can be a bit higher. So usually with residential property, you're looking around the 200 plus balance. With a commercial property, I would say 350 plus, 400 plus, just to make sure, like if you're purchasing a property for $1 million, 300K is just for the deposit, right?
Yeah.
So you need to make sure the numbers stack up to not create a pressure or avoid any issues down the line. So the questions that I guess any of those groups that needs to ask is, how long am I planning on holding this investment? Is it a long-term thing, or is it something that I might see useful, beneficial for the next 2 to 5 years, right? Because you don't want to be flipping that property anytime soon. You want to hold it for as long as possible. Does the SMSF have sufficient funds do the numbers stack up? And that's where we do the work to make sure there's enough funds in there to cover the purchase that you're after. Would commercial property complement my existing investments? So is that something that will help me achieve my wealth goals or my business goals, or right? So you need to ask yourself these questions. And obviously the most important part is, did I seek advice from my advisor or accountant, and have I spoken with my mortgage broker just to make sure that this is the right thing for me and it's not going to leave me in a bad position? Because at the end of the day, you're investing your retirement funds, right?
Yeah.
And you don't want to you don't want to make the mistake of jeopardizing your super balance or retirement in one bad investment. So you need to have those conversations. You need to do your due diligence. You need to have discussions with professional people just to see what your options are, what the risk is, and how to minimize that risk for the biggest return. So just like everything, but just because commercial is so broad and it's not as popular as residential property, you just need to educate yourself, basically.
Yeah.
So that's what leads us to the benefits and the risks, right?
Yeah, and I think just before we quickly jump in that, talking about the, having enough sufficient funds in the self-managed super fund to purchase a commercial property, because you talk about the extra deposit required. So instead of maybe 20%, you may need 30%, or you probably should allow for 30%. There's still the stamp duty that comes into play as well. And then with some commercial property, you may also be liable for GST as well. So you've got to be able to fund that up front as well, because when the banks typically lend, say, 70% loan to value ratio, they're going to be 9 times out of 10, they're going to be basing that 70% off the pre-GST amount, which means, the bank will fund the 70%, but then you've got to fund the 30% plus the stamp duty plus the GST. Yes, the GST can be claimed back, I think, after 12 months or the next tax return with a super fund, but you're going to have to fund that up front.
Absolutely.
So it's important to know that. And that's why I think, that $500,000 mark, probably $500,000 mark upwards is ideal for a commercial SMSF purchase. So
absolutely.
Sorry, what was your question? What
the benefits and the risks of buying an investment property.
I think just to summarize it, I know we've probably mentioned a few of these already, but, building your retirement wealth through property ownership in a different type of way, because the most recent government legislation has made it a little bit more difficult to own it in your personal name. So this is just another way to do it. Good rental income flowing into self-managed super funds, so continue that growth. Potential capital growth is obviously a good benefit, and seeing that happen. So. But the main thing I think would be, we've talked about this before, was the greater control if your business occupies the property. You're not having that thought in the back of your mind if you're renting it to somebody else. If you're renting it from somebody else, what happens if they sell it? Am I going to be kicked out? Am I going to be told to vacate? Whatever.
Exactly.
You get to control, I guess, the bigger picture.
And rent is increasing every term as well, so you need to elaborate that.
So you're not only controlling your investment within self-managed, and you're also controlling your business as well, because you've taken one element out of the equation that might be, do I need to find another property because the owners decide to sell up and someone else might want to use it themselves.
Especially if it's like a specialized business, right? Like let's say you're a mechanic. Right. Yep. So you've got all the equipment there. You've got your
it's massive,
right? Yeah. So to be moving all this across to another building, like
especially like even the warehouses, like the racking that you see in the warehouses, and nowadays the warehouses are all pretty much automated. Not all of them, but a lot of them are becoming automated. So you've got not only the racking shelf, but you also got all the automation, little robots,
the setup,
little bots flying around and collecting all the products. So, and I think the other benefit is having those longer commercial leases, which just provides more predictable income. So it's, I guess, a bit of a set and forget for a little bit longer period of time as well. And obviously on the flip side, yes, they do have risks. Commercial properties can experience longer vacancy periods. So because, finding the right tenant is not easy to do, because I guess if you look at residential property, you've typically got a real estate agent who goes and finds you a tenant. And yes, you can do that on the commercial side of things, but for a commercial tenant, you want to make sure it's a very stable business as well. So yes, they'll be able to provide, pay the rent, but for a longer period of time as well.
Yeah.
So you're also doing your due diligence on the business, being a potential tenant as well. So
Good point.
Deposits are generally larger than residential purchases. Finance policies are often stricter. Probably not a huge, not a huge amount. I think it's, we'll caveat that with there's only a few little minor details, so I wouldn't be too concerned about that. Maintenance costs can be higher depending on the property. The good thing is the outgoings are typically paid for by the tenant as well, so that's always a good little benefit. Values can fluctuate depending on economic conditions and local demand, but you know what? That's the same with residential property as well. So I wouldn't have that as a risk. That's just exclusive to commercial property. That's probably more broader. But yeah, as always, that's why we get people to seek the right type of professional advice.
Absolutely.
And I think if you're a business owner, having that advice from your accountant, not only for your self-managed super fund, but also for your business itself, that's going to be potentially renting that out. So,
Absolutely.
I don't know if you want to just summarize in terms of...
We'll go through quick questions.
That's probably just more so to recap what we've spoken about.
So can my business rent a property owned by SMSF? Obviously, we answered that, but yes, provided the lease is within the market rates and it complies with your superannuation legislation.
Yep.
Can my self-managed super fund buy any commercial property? Mostly yes.
Yeah.
But obviously from a lending point of view, it needs to tick the lender's approval. So always check before you commit.
Yeah. I'll go to the next one. Is commercial property safer than residential property? The simple answer is no. They're just simply different investments.
Yep.
So one's not safer than the other. They just carry different risks, but also different opportunities and different benefits as well.
Yep.
This is an easy one. Do I need a large super balance? Because we've just covered off on that. So generally speaking, yes, you will need a larger super balance because you need to fund a greater deposit that goes with that. So I'll let you close out, mate.
All right. So, obviously commercial property has always been an option for investors. It's not a replacement. It's an add-on to your residential portfolio and any other investments that you've got going. So it's definitely something that's worth looking into. And I know a lot of people who invested in commercial property long time ago, and it's been one of the best investments they've done. So it's obviously for the right investor, for the right person that know what they want to achieve, and they do their due diligence, they do their homework, they educate themselves, and they make the right moves. So it can be a very powerful long-term strategy because, as is said before, usually you start with your residential investment and then move on to your commercial investment.
Like riding a bike and then you have a little trainer wheel. How do I say you get your first property?
It's a bigger exactly.
By the time you get a commercial, you've got no training wheels on and you're going.
Yeah, 100%.
But I think that peace of mind for business owners is, I've seen that many times before where the business owners have purchased the properties they're occupying through the self-managed super fund. Just that peace of mind is it's important. You can't put a dollar amount on that, that's for sure.
So basically, as usual, it's very important to understand the process, understand your options. And as always, you need to seek advice, seek professional advice, speak with the right people to know your numbers, to know the implications you can have on your super or on your tax or on your retirement or on your returns. So all these things need to work together to give you the best outcome. And as usual, we're available for any chats, questions, discussions. If you feel like this episode has brought you some extra information, some extra knowledge, we would really welcome any feedback, a good review, and we'll see you next time. Thank you very much. See you later. Cheers. Bye-bye.
Disclaimer. The information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.